Good morning, SMF Street Traders, and good morning to our people around the world who live in other countries. You're very part of it. We want you to join SMF Street. It's a good place for you to be. You can see how our trading division works. You can see lots of wonderful things. And you're important to us. The MMTs, we are going to be looking at a $550 call for October. During the September expiration, we were having people buy call options when they were deflated down here. And, you know, we trade Google almost every single day of the week. And these calls at the time down here were very cheap to have in your account. And in fact, they were so cheap that they were just a lousy 66 cents. That's how cheap they were. 65 cents, 53 cents. Okay, so the low of the contract is 53 cents. The volume traded that day was 1,008, and the open interest only remains at 515. That's up and out of the money. And you're probably wondering what it's all about. Unfortunately, it's ran $7 a contract. And we already did the weekly bull chart. And yes, Google has a brand new bull chart. But then on the other hand, down below the marketplace, this is a 520 put that was at $40 1, 2, 3, 4, 5, 6 days ago. Now, in the kind of market that we're in, and most people don't understand it, even the pros don't, but we get to these exuberant, extreme levels at times, and mathematical imbalances is way down, imbalances are way up. And then they have their own natural rebalancing in price. Both contracts do. In this particular market, this particular call, because it's bloated, meaning that when Google pulls back in the actual equity trend, that's Google. When Google pulls back in the equity trend, it's going to bounce really super hard and fast off of support. Now, granted, the good thing is that that's the bull trend. There's a new bull trend on the equity. But let me tell you something, MMTs. We always do what we do best. And that is managing our dollar cost capital risk. And at the end of the day, no matter if Google wants to go a lot higher, we always look, MMTs, at the back half of every trade. And this happens to be the $520 put, which happens to be MMTs. We hit a high of 527.83. It closed. It had an opening gap on Friday to 518. Then from there, from 518.26 to 527.83 was your true movement on the opening bell or throughout the trading day of that low end of that gap. That was a hard gap. $5 hold it, didn't shake anybody out, and it burned, and it was what we call an SMF MMT runaway gap. And people were chasing performance. And as they chased performance, we got up to the high level of 527.83. And it's very, very important for you to know, MMTs, is that we're dealing with a $520 put that was at 18.5. They gapped the contract down to 15.90, took it to the intraday low of 12.30. So basically, this contract was already way upside down. And MMTs, we have been waiting, and we have been waiting it out so that we can start to put on the back half of our front half bullishness. We're extremely bullish on Google. We're extremely bullish that when it breaks above the 50-week moving average. We're extremely bullish that it's closed above its 10-month average, moving average. And we are. And the thing about it is, we can trade these contracts all the way up. Google reports earnings on October 15th. We can start looking at the back end of the 520 put. I've already given the MMTs the complete pricing structure. The lesson for the new MMTs is this, and people that are attending our free 5-day trial training session today, is that I'm extremely bullish on the monthly and the weekly charts. I'm extremely bullish on the price action breakout in Google. But as a true SMF risk manager MMT trader that you are, it is your due diligence to look at the other side of the story. And what that means: dollar cost, risk, capital, entry. This is the side of this 520 put that we've priced out. And in that 520, now that's a 520 put, and we closed at 527. Google, just like it goes up $13.81, it could drop on the opening bell or intraday. We see it all the time. We've been trading it since it came public. We know the stock well. It's one of our MMTs that are traded on a daily basis, times 5, all day, all week, all month, and all year long. Bottom line, it makes good money. It's a good trading stock intraday, long and short. So the short side of the trade is what we look at. And we're going to be getting the wholesale entry. What we're going to be looking at, once again, MMTs, is the fact that the 750 call is up here in what we call the inflated zone. And they could easily trade up to $10.50 before resting. The intraday call of that 550 is very tradable. Moved $3.7 that high up and out of the money. So basically, when Apple broke above that 515 area, that's where the previous premiums was setting up for a much larger premium move here, such as we had on Friday at 2,900 traded. So MMTs, the bottom line is these are intraday tradable. This one over here is buyable at the wholesale market prices. So when it comes time for you to buy this 550 call up and out of the money, that you have your back end risk management as the true SMF MMT risk manager that you are, because you have been trained that way by SMF Street. This is not a day trading operation, nor is it a day trading firm. This is a pure trading firm that trades long and short prices. And that the MMTs are in the school, and they do trade by trade live online. And they learn that the options market, what they understood about it before coming here, didn't work. But they do know that being here now, that doing the work this way, that they can work, and they do work. And our system as a market making system in options and equities is quite different than the public engagement in Wall Street. They've got a mindset in the same way that they do things. MMTs, though, are wholesale equity market makers and wholesale option market makers. That's what we do. And the thing about it is, we're going to buy that contract and we're going to trade this one on intraday. I've given out the pricing structure. I'm going to be moving on to other call and strike prices on Google. The 520 put, as you can see right here, right now before your eyes, right here, right now, you can see that the contracts had a spot high right here in the recent trend. That's 915. So from 915, they went from 42.89 down to 12.30. Now, MMTs, you know that if I'm buying contracts down here, I've taken all of that volatility, all of that risk of being stuck. People ride these contracts down. When they get short, They don't know when to come out of the short and get long. We're always long against the short. Or we're long and then we're buying the short that we're doing right now. So basically, MMTs, I've set the alarms. This is getting that back end trade.